Okay, so good afternoon, Miss Alfia and friends. We are from Group 8. Will be discuss about the assets. The group is consists of me, Chessa, Maryam Ulfah, and also Tesalonika. This is the table of contents that we will discuss for today. The first one is the asset define and recognitions. Second one, asset measurement. And the third one is challenges for standard setter, and the fourth one is issues for auditor. Okay, so I will discuss about the asset define first. So based on ISB, asset is defined as a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow to the entity. And based on KPPK 2019, aset is defined as a sumber daya ekonomi kini yang dikendalikan oleh entitas sebagai akibat peristiwa masa lalu. Sumber daya ekonomi adalah hak yang memiliki potensi menghasilkan manfaat ekonomi. Okay, so from these definitions, we know that asset has three essential characteristics, such as future economic benefits, control by entity, and past events. However, apart from these three components, there is also one component that many researchers consider to be an essential characteristic, which is exchangeability. These work components will be discussed in the next slides. Okay, so I will discuss about the three essential characteristics first. The first one is future economic benefits. So based on ASB framework paragraph 53, um, we are year 2020, future economic benefits embedded in assets are the potential to contribute either directly or indirectly to the flow of cash and cash equivalents to the entity. Okay, so for example, is uh, the entity decided to generate the revenue from the operating activities, or maybe it want to reduce the cash outflows. Okay, so anything of this is up to the entity. Okay, so to be qualified as an asset, the future economic benefits must help the entity to pursue its objectives. The notion of future economic benefits related to economic resources. Two main characteristics of an economic resources is scarcity. Scarcity means the objects are not available for free for everyone. So if a resource was not scarce, then the resource would not be economic. That means if a resource is scarce, then it is considered to have economic value. So otherwise, if a resource was not scarce, then the resource would not be economic. The second one is utility. Utility relates to the future economic benefits or services that I mentioned before. So, utility is the ability to satisfy human wants or give future benefits. So, if the assets can satisfy or fulfill what the entity wants, that means it has these utility functions. Okay, so based on my explanation before, we can conclude that benefits ultimately relate to the satisfactions of human wants. So, if there's an insufficient supply of a given commodity, and the commodity has utility which make it desired or demanded by people, then it has economic value. Okay, so asset is something that exists now. It can be in the form of something tangible, such as building, or maybe intangible, like right. An asset has the capability of rendering service or benefit currently or in the future. For example, a building is called an asset because it has the bricks and mortar, which can be seen or tangible, and it exists now. And also, it has the capability of rendering service or benefits by its space services. Okay, the next one is control by entity. So, Ijeri states that accounting is not concerned with economic resources in general, but only those which are under the control of a given entity. As I said before, asset is something that exists now and have the capability of rendering services or benefits. But every object that exists now and has the capability which will be considered as our asset? Okay, so for example, that I have a house and my neighbor also have a house, but the difference is my neighbor also has a yard. Uh, Yacht is an object that exists now because it can be seen, and also it has the capability of rendering benefits. Like it can be the place for us to grow plants that some of the plants maybe can also produce fruits or vegetables, and then those can also be consumed by us, something like that. But in this context, can I record this yard as my asset? Of course not, because why? Because I don't own my neighbor's yard, right? So I can record it as my asset. Okay, so now the question is, does this mean that asset must be owned to be considered as an asset of the entity? As Pratt commented, a possession of a thing is merely the right to use it or control it. It means that the ownership doesn't always mean that we own the object, but the term own or ownership in this context means that we own the right to use or control it. So the control an owner has over property is not absolute. The real asset is the right to use the object, not the object itself. Okay. As point, the real asset is the right to use the object, not the object itself. The control an owner has of property is not absolute. As Patton points out, that the scope of private interest is always subject to the general rights of the states, as well as the particular statutory limitations. In this case, the government's power can nullify a person's control over property. For example, the ownership of our home, it doesn't entitle us to can use it for commercial purposes, such as to make it into a to become a boutique or a cafe, unless it is permitted for by the local governments or maybe public opinions, because public opinion can also be asserted to be a powerful restraint, so that entities control over an asset can be limited. For this explanation, we can know that the right to use or control an asset, as stated in the definition, doesn't imply that an entity must be able to do absolutely whatever it pleases with the asset. Okay, so the point that we have to remember that the real asset is the right to use the object in, and not the object itself. Okay, so the third one is past events. There are 2 points that I want to highlight in this characteristic. The first one is asset must be controlled by the reporting entity as a result of past events. So we can record it our building, for example, as an asset because we already bought the building. First, the purchase of the building from other parties is an example of past events. And the second one is the framework definition of assets ensure that the planned assets are excluded. For example, machine already acquired by the company, it can be recorded as an asset. But a machine that is to be acquired according to the budget is not an asset until it has been acquired, since the purchase transactions has not yet taken place. Okay, so the last one is exchangeability. Some researchers argue that the definition of an asset should include the conditions that an asset can be exchanged. Exchangeability means that an item is separable from an entity and that its disposal value is separate from the value of the entity. As McNee stated, a good that lacks exchangeability must lack economic value, because its purchase or sale must forever remain impossible, and thus no market price for it can ever exist. Okay, so the asset that especially affected by these conditions is goodwill, because goodwill can be sold separately from the other assets, but it uh, we always can record it as an asset, right? Okay. There's also some researchers that also argue about the exchangeability because they say that exchange is only one way to obtain the benefits of assets. For example, inventory, because inventory is one of the type of an asset that the benefits are derived mainly through an exchange. Okay, so in conclusions, exchangeability is characteristic that support the existence of the assets, but it's not an essential characteristic because it not imply for all assets. Okay. Before we all already discussed about the definitions of an asset, now I will present about the asset recognitions. Not there is a there are 2 points about the how to recognize an asset. The first one is the recognition rule, and the second one is recognition criterion. So recognition rule is a specific rule to identify a particular asset. Meanwhile, recognition criterion is a general guideline used to formulate recognition rules and a recognition guideline that provides assistance rather than prescriptions. Recognition rule itu have been formulated because accountants required evidence to support the records in an environment of uncertainty, so that particular assets that exist uh, can provide useful information in the balance sheet that is both relevant and reliable. There are some recognition rules, such as the informally expressed as conventions. For example, an account receivable is recorded as an asset when a credit sales is made, or um, there's a formally designated in authoritative pronouncement. For example, there's a guideline adopted for the recognitions of finance lease as an asset that is regulated in IS 17 or ASB 117. This will be discussed more in the next slide. Okay, so uh, as I said before, there's also the recognition criterion. Re- Recognition criterion is okay. So the objective accounting provides the basis for recognitions of the subsidiary objective of relevance and reliability of accounting information. Framework recognition criteria incorporate considerations of the probability of economic benefits being forthcoming and that to qualify for recognition in the accounts. The asset must be capable of being measured reliably. So there are numerous recognition criteria that have been applied by the accountants to record the assets. The first one is reliance on the law. This criterion means that the assets can be recognized depends on the legal concept of the asset. For example, the recording of the account receivable due to the sale of inventory and the purchase of fixed assets, giving the legal rights for the entity to use them. This criterion relates to both relevance and reliability of accounting information. But we also have to remember for the second point, there is determinations of the economic substance of the transactions or event. It means that although legal rights of ownerships or control of the benefits from use of property can can be used as a recognition criteria, the overriding recognition criterion is that economic substance rather than legal form. So even though asset must comply to the law, it also has to remember the economic substance. And the last one is the use of the conservatism or the prudence principle. So as the conceptual framework paragraph 2 and point 16 states that prudence is the inclusion of degree or of caution in the exercise of the judgment needed in making the estimates required under conditions or uncertainty, such the assets or income are not overstated and liabilities or expenses are not understated. So conservatism implied that liabilities can be recorded early but not for assets. Okay, so uh, the conservative principle refers to the recognitions of expenses and liabilities as soon as possible when there is uncertainty in that matter, but only recognize the value of revenue and assets when they are actually received. Okay, so it anticipate the loss but not the gain. Okay, so this is the definitions of ASB Framework Paragraph 51 and ASB Conceptual Framework 2.16. For ASB Framework Paragraph 51, it said that in assessing whether an item meets the definition of an asset, liability, or equity, attention needs to be given to its underlying substance and economic reality and not merely its legal form. For example, finance lease. Okay, so based on the reliance on the law, the lease asset is lessor's asset because according to law, it's the lessor who have the ownership of the asset. But if we um, look at the finance lease based on economic substance, then we can know that it can be recognized as the lessee asset in the balance sheet because the lessee acquired the economic benefits of the use of the leased asset for the major part of its useful life. Okay, so I will also explain about the investment property as one type of the assets that is regulated in PSAK 13. So investment property is a property that can be land or building or part of the building or both that is held by the owner or lessee through a finance lease to earn rentals or for increases in value or both, and not for use in the productions or supply of goods or services or for administrative purposes or sale in their daily business activities. So based on definition, we can how can we recognize the investment property as an asset? So the investment property can be recognized as an asset if it is probable that the future economic benefits associated with the investment property will fall to the entity, and the cost of investment property can be measured reliably. Okay, so that's all for assets recognitions, and then it will be continued to asset measurement, whom which will be explained by my friend Tessa.
So, I'm Tesalonika, and I'm going to explain the asset measurement. Once recognition criteria are met, the accountant must decide how to measure the asset. As discussed in previous week, there are two approaches to measuring asset. The first one is the measurement at acquisition cost or historical cost, and the second one is measurement at fair value. The measurement at acquisition cost is supported by the argument that costs at the acquisition date are considered more objective and able to provide reliable and verifiable information through evidence of past transaction. On the other hand, the fair value approach is considered capable of providing relevant information for current decision making because it is based on the current value, but its reliability level considered lower than historical cost. Once measured, the information about asset value can be included in financial statement or it can be included in the note disclosure for the asset remeasurement. Now we are going to talk about tangible asset measurement. The measurement divided into two sections, the main measurement and subsequent measurement. For the main measurement, based on the traditional approach, tangible assets are measured using historical cost or cost at acquisition date. After we measure the asset, we do the subsequent measurement. IASB standard permit two options for the subsequent measurement, cost model or historical cost model and revaluation model. Subsequent measurement based on historical cost or cost model measures asset at acquisition cost less any accumulated depreciation and impairment charge. The supporter of this option argue that this model provides objective and verifiable information. Furthermore, the application of depreciation and impairment ensures that it represents the current value. This model is also consistent with the conservative approach measurement, where losses in the value of asset are recognized in the financial statement, while gains are not recognized. Another option is the revaluation model. Revaluation is adjustment of the asset value to the current market price. IAS 16 permit manager to use the revaluation model for subsequent measurement. Subsequent measurement based on revaluation model measures asset at market price at revaluation date less any depreciation and impairment charge. The supporter argue that this model can provide more current information about value than historical costs. For example, value of land. Managers can revalue the land in times of rising price so that assets are not understated on the balance sheet. In the revaluation model, gain on remeasurement were traditionally included in equity on credit asset revaluation and increased asset on the balance sheet. However, IASB cannot promote one measurement model over another because of its diversity in practices. There are so many factors that can influence a firm's choice of measurement model. For example, in 2005, firms in UK and Australia were observed to make less use of revaluation model compared to the prior periods caused by many factors, such as low inflation environment and the introduction of new accounting standard, which required revalue asset would not be materially different to its carrying amount. Since PAS AK 16 adopt IAS 16, the measurement of tangible assets is not different. For initial measurement, the PAS AK 16 states to use the cost model or measure at acquisition cost. This is written in paragraph 15 of PAS AK 16, which states that a fixed asset which qualifies to be recognized as an asset initially should be measured at acquisition cost. Costs which are included in the acquisition cost are the cost of asset, include tax, costs that are directly attributable to bring the asset to the location and condition desired in order asset ready for use, and initial estimate of unloading and moving cost, fixed asset, and restoration of asset location. For the subsequent measurement, same as IAS 16, PAS AK 16 required two measurement options. The first one is cost model, where assets are measured at acquisition cost less any accumulated depreciation less impairment, and the revaluation model, where the asset value is measured at fair value at revaluation date less accumulated depreciation less impairment charge. PAS AK 16 also includes biological assets. Biological assets are defined as productive plants that meet all the following criteria. The first one is used in the production or supply of agricultural product, expected to produce a product for a period of more than one period, and has a very rare possibility of being sold as agricultural products except for the sale of incidental scrap. Example of productive plants are the palm trees. However, output from productive plant do not include in PAS AK 16. The output from productive plant, called agricultural product, are regulated in the PAS AK 69. Similar with tangible asset, measurement of biological asset use cost model or cost at acquisition date. For subsequent measurement, we can use either cost model or evaluation model. Although PAS AK adopt 16 adopt IAS 16, there are some parts that are not adopted. The difference between IAS 16 and PAS AK 16 are, the first one is biological asset. In PAS AK 16, biological assets are included in the scope of tangible asset, whereas in IAS 16, it is not included. Biological asset included in the scope of agriculture in ES 41. Then effective date. PES-AK 16 does not adopt the effective date list in the ES 16 because it is not relevant. Next, change in accounting. PES-AK provide additional policies in paragraph 43 related to the change in accounting policies from the cost model to the revaluation model, which it isn't regulated in ES 16. And the last one is transition. PES-AK 16 provide new provision regarding transition, not adopting ES 16 because it is irrelevant. Then we are going to talk about intangible asset measurement. Accounting practice in relation to measure of intangible asset has been conservative. As for tangible asset, ES 38, paragraph 24 requires that intangible assets be measured at cost or at cost of acquisition. For the subsequent measurement, accounting standard permits two options, cost model and revaluation model. In the cost model, intangible asset measured at cost at acquisition date less amortization. However, ES 38 permits the revaluation model, but it is rare to use because unlike tangible asset, intangible asset by their very nature do not have any active market, which is the reference of a value. In addition, ES 38 prohibits recognition of internally generated intangible asset. Although the expenditure may give rise to the future benefit, it is written off on the basis that it does not produce a separately identifiable asset. Internally generated intangible asset can appear in the balance sheet only via capitalization of development costs. Referring to paragraph 24 of PES-AK 19, intangible assets are measured at cost model or at acquisition cost. Costs that included in the acquisition cost are the cost assets itself, including tax and duties and custom costs, and any cost that can be directly attributed in the preparing these assets so that they are ready for use. Example, professional cost or tax control cost, and so on. For the subsequent measurement, PES-AK 19 adopt ES 38, which provide two options, cost model and revaluation model. In the cost model, value of asset is measured at acquisition cost, less any depreciation and impairment charge. However, although intangible asset doesn't have any active market, but PES-AK 19 permit the use of revaluation model. PES-AK 19 define active market as a market that meet all the following conditions. Assets that are traded in the market are homogeneous. Buyer and seller transaction can be usually found at any time. And available price for public. If the active market didn't exist, the fair value of asset can be determined by how much the entity want to buy that asset. In order to set the value, the entity is also considered result of recent transaction for similar assets. As the ES 38, PES-AK 19 is also prohibit recognize internally generated intangible asset as an asset. Example, goodwill that internally generated. Internally generated asset can be recognized an asset if only it is fulfill all the requirements such as technical feasibility of completion, ability to use or sell, most likely yield future economic benefit, ability to measure reliably the expenditure associated with the asset, and so on. The expenditure on generated intangible asset internally can be capitalized on balance sheet if only it is at development stage. As long as it's on research stage, it cannot be capitalized. Lastly, we are going to talk about financial instrument measurement. Financial instruments are assets that can be traded or they can also be seen as a package of capital that may be traded. Example, loans, available for sale securities, hold to maturity investment, and so on. Financial instruments initially measured at fair value because historical cost principles are inappropriate to measure some financial instrument. For example, derivative. Derivative have derivative have no cost. Over time, their value can change dramatically due to some condition. But under the cost model, the change in value would not be recorded in the financial statement. So that IASB and FISB conclude that derivative should be measured at fair value rather than cost. Fair value defined as the amount at which the instrument could be exchanged in a current transaction between willing parties, other than in a forced or liquidation sale. The fair value itself is determined either from quote market price, a price at which one party is willing to buy or sell a certain number of shares from the other, or management estimate based on market price of similar security of present value estimation of future cash flow. This model raises pro and contra from the standard setter. Pros argued that fair value model provides relevant information for user because it is based on the current price. However, contraparty argues that fair value model reduces the reliability because of the exact measurement method used to determine the value. Subsequent measurement of financial instrument is measured as fair value. The change in the fair value can be recognized in income by designating them as fair value profit or loss. Alterna- Alternatively, entity can be classified asset into the other categories. There are four different categories of financial instrument that have different measurement method each financial instrument. The first one is originated loans and receivable. This financial instrument is measured at amortized cost, which means that it requires interest must be recorded on the amount outstanding. For example, on a $10 million 5% loan with $10 million repayable at the end of the 3-year term, interest will simply be recorded as $500,000 a year. The second one is held to maturity investment. The held to maturity investment is the investment that cannot be sold or transferred during the financial years. It is measured at amortized cost and subject to review impairment in value. Then, available for sale security. This financial instrument is measured at fair value with gain and losses from the remeasurement recognized in equity. The last one is financial asset held to maturity or classified as fair value through profit or loss and derivative. It is measured at fair value with gain and losses arising on remeasurement taken to profit and loss. In PES AK 71, financial instruments are classified into three types: financial asset, financial liabilities, and derivatives. Example, option. This time we will discuss about financial asset. Financial assets are known as high liquidity. The value of financial asset is obtained from contract rights and ownership claim, such as cash, stock, bond, or mutual funds to bank deposit. Similar to ES 39, according to PES AK 71, the initial measurement of financial assets used a fair value model. Meanwhile, for further measurement, you can use fair value through profit or loss, fair value through other comprehensive income, or amortized cost. Determination of further measurement is based on two tests. The first one is business model test and characteristic of contractual cash test, which is commonly called the SPPI test.
And now, I explain Learning Objective 4 about challenges for standard setters. The FISB and IASB in turn to address the issue of measurement in phase C of the conceptual framework project. Issues to be considered include potential measurement basis, pass entry or exit prices, modified pass amount, current entry, exit or equilibrium price, value in use or future entry or exit price. As a part of the project, the board will consider measurement concept, principle, and terms. They will evaluate and rank measurement methods according to the extent to which they meet required qualitative. Which measurements model? There are measurement models. Fairvalue is the Fortuner, and ISB and FASB support. Fair value are used to measure assets on initial recognition. For example, in IAS 16 about PPE, IAS 17 about leases, and IAS 39 about financial instruments. 39 about financial instruments. And these three hierarchical level for the inputs. The FASB statement also provides a fair value hierarchy, that is, it nominates three categories or level for the inputs that be used to estimated fair value. Level 1 use quoted prices for identical assets and liabilities in active reference market whenever the information is available. Quoted prices shall not be adjusted. Level 2 if quoted prices for identical assets and liabilities in active market are not available, fair value shall be estimated based on quoted price for similar assets or liabilities in active market, adjusted as appropriate for differences. And level 3, if quoted prices for identical or similar assets and liabilities in active market are not available, or if differences between similar assets and liabilities are not objectively determinable, fair value shall be estimated using multiple valuation techniques consistent with the market, income, and cost approaches. And now learning objective 5 about issues for auditors. Auditing fair value creates difficulties because it requires the application of valuation models and frequently the use of valuation experts. And the auditor needs, in a synthesis of research to date, Martin, Rich, and Wilkes argue that as more assets and liabilities are measured at fair value, auditors need to understand more about valuation models and the management processes that determine the input to those models. Even when specialist value are used to develop an effective audit approach, auditor needs to understand the client firm processes and relevant control for determining fair values, and make a judgment on whether the client firm's measurement methods and assumptions are appropriate and likely to provide a reasonable basis for the fair value measurements. Martin et al. Also point out that auditors need to appreciate management potential biases and likely error in applying valuation models, identifying market inputs, and making the required assumptions. If managers have intensive to overstate assets, then auditors need to be aware of the critical components of valuation models that will make this easy for management to achieve. Now PSAK 57 and PSAK 48. The definition of PSAK 57. Number A, profession are liabilities with uncertain time and amount. In the definition of contingent liability, the entity's present liabilities arise from past events whose completion could result in outflow of the entity's resources that contain economic benefits. And the definition contingent asset. Contingent assets are potential assets that arise from past events and their existence is certain whether or not one or more future events are not fully under the entities. Control contingent assets are potential assets that arise from past events and their existence is certain whether or not one or more future events are not fully under the entity's control. PSAK 57 recognition. The liability recognition contingency entities are not permitted to recognize contingent liability berdasarkan PSAK 57 pada paragraf 27. Why the contingency entities are not permitted? Because there is no likelihood that the entity will issue source power that contains economic benefits to complete its obligation, or the amount of the obligation cannot be measured reliable. The next recognized contingency asset. Entities are not permitted to recognize contingency asset. PSAK 57 paragraph 31. Why the entities are not permitted to recognize contingency asset? Because the financial statement because they can give rise to recognize of income that may never be realized. However, if the relation of income can be ascertained, then the asset is not a contingent asset but is recognized as an asset. And the provision recognition, present obligasi past event, probable outflow, and reliable estimate. And the next about PSAK 48 impairment. An asset impairment occurs when the carrying amount of the asset more than its recoverable amount. Reviews are carried out periodically to carry out tests of impairment if there are indications. The company must estimate the recoverable amount of these assets. And PSAK 48 prescribe the recoverable amount of an asset as a higher intermediate amount, fair value less cost to sell, and value in use. Okay, now we will discuss about cases. The case studies that we take are PT Bank Cim Niaga Tbk. The profile of PT Bank CIMB Niaga Tbk. PT Bank CIMB Niaga is a company that provides financial services. Established on 26 September 1955 in Jakarta, Indonesia. Most of their shares are owned by the CIMB Group, the bank with the largest payment in terms of transaction value below the custodian. Cooperating with MNC Group, Ncim Niaga has 1,080 retail branches in Malaysia, Indonesia, Singapore, Thailand, and Cambodia. Products and services that are serviced and equipped with an international scale. Investment with the largest investment in Asia Pacific except Japan. And since 1989, Bank Niaga has listed its share on the Indonesian stock exchanges, Jakarta and Surabaya. The differences between PSAK 55 and PSAK 71. The point determination of the classification of financial assets and liabilities at PSAK 71 based on a business model with SPPA PPI slowly payment of principal and interest test, and at PSAK 55 based on management intentions. Classification of financial asset at PSAK 71, fair value through profit or loss, fair value through other and amortized cost. And at PSAK 55, held to maturity, fair value through profit or loss available for sale. Reclassification of financial asset. If there is a change in the company's business model, and at PSAK 55 allowed for certain conditions, not subject to changing rules. The changing rules at PSAK 71 related and PSAK 55 applies to reclassification of HTM or held to maturity and categories FAS over material limits. Hedge accounting at PSAK 71, simple record and documentation. Directly related to risk management strategy, assessment of effectiveness in accordance with risk management objectives. Compared to PSAK 55, that is more detailed requirements and documentation. There is no direct relationship with the bank's risk management strategy, and effectiveness rating 80% until 125%. And the point of impairment at PSAK 71 expected credit or loss. Compare PSAK 55 in credit loss. And the next will be explained by my friend. Thank you.
Okay, thank you, Mariam, for the explanations. Next, I will continue the the analysis of the CIMB Bank case. Okay, so before Mariam already mentioned about the difference between PSAK 55 and PSAK 71. Now I will explain more about the impact of the implementations of PSAK 71. So it impact the classification and measurement of asset, the impairment, and HATS accounting. Okay, so PESAKA 71 it introduced new arrangements for the classification and measurement of financial instruments based on the assessment of business models and contractual cash flows. It also recognizing the make a new arrangement with the recognizing and measuring allowance for impairment losses on financial instruments using the expected loss model, which replaces the resulting credit loss model and provides a simpler approach to HATS accounting. Okay, so for the classifications and the measurement of the asset uh, is based on the contractual characteristic of the entity, cash flow, and business model. So if the financial asset is a simple debt instrument with the objective to obtain contractual cash flow, then it can be measured at amortized cost. But if the financial asset is held for the purpose of a business model to collect contractual cash flow and for trading, then it can be measured at fair value and presented in the statement of financial positions. While information on amortized cost is presented in the profit or loss. Unless if the business model of a financial asset is neither of these two models, then fair value information is very important. Therefore, it should be measured um, at fair value through profit or loss or FVTPL and must be disclosed in the statement of financial positions and income statement. Okay, so then about the regulation about the impairment. So the expected credit loss impairment model is a more forward-looking method for measuring impairment losses on financial instruments. It requires the entity for each reporting date to assess whether the credit risk on the financial instrument has increased significantly since initial recognitions using forward-looking information that is reasonable and supportable. And the last, for the approach it used for hedge accounting, it will eliminate the 80% until 125% effectiveness test requirements and introduce more general requirements based on management judgment. Okay, so before we already discussed about the impact of the implementation of PSAK 71 generally, but now I will discuss about the impact of the PSAK 71 for PT Bank CIMB Niaga Tbk specifically. So, PSAK 71 has a significant impact on an entity profits, especially bank, because of the greater amount in the allowance of impairment losses or CKPN, because it calculated using the term of expected credit loss or ECL. Okay, so based on the assessment of the business model and contractual cash flow, the new arrangements for PSAK 71 for the classifications and measurement of financial instruments have no impact on the carrying amounts of financial assets and liabilities as of January 1, 2020. Because of the transitional requirements in PSAK 71, then Bank CIMB Niaga and its subsidiaries have to make adjustment according this, where Bank CIMB Niaga chose to apply retrospectively with a cumulative impact at the beginning of implementations, which was recognized on January 1, 2020, and it didn't represent the comparative informations. And also because it implemented PSAK 71, it has to make an adjustment to the balance of the retained earnings at the beginning of 2020, amounting to 5.4 million rupiah, which originated from the increase in the allowance for impairment losses. It can be seen in the Note 65 consolidated financial statements. Now I will tell about the comparisons before the implementations of PSAK 71 and after the implementation of PSAK 71 for the PT Bank CIMB Niaga Tbk. It will specifically talk about the impairment. Okay, so before the implementation of PSAK 71, Bank CIMB Niaga uses PSAK 55 to record the impairment. It will determine the allowance for impairment losses on financial statements for financial guarantee contracts with credit risk based on historical loss data. Okay, so therefore it will be calculated using the principle of impairment in accordance with the applicable Indonesian accounting standards. But after the implementations of PSAK 71, uh, the significant difference is in the collective evaluations of the impairment losses, in which Bank CIMB Niaga and its subsidiaries use a complex model using the probability of default, loss given default, and exposure at metrics, where the discounted default uses the effective interest rate. Because this significant difference of the changes in the impairment calculations, it will also it will significantly change the amount of the return earnings of the PT Bank CIMB Niaga. Okay, so um, this is the concrete proof of the impact of the applications of PSAK 71 in PT Bank CIMB Niaga balance sheet. In this balance sheet, we can know that because Bank CIMB Niaga using the PSAK 71, there's an estimated losses on commitments and contingencies by 35 million rupiah. And also, there's changes in the loans for impairment losses that can be seen in Note 65 consolidated financial statements. In this picture, we can know that uh, there's a decrease in the loans for impairment losses for 2020 using the PSAK 71 dan the PSAK 55 by more or less 20 million rupiah. But we also can see that in another sections there also the changes in the allowance for impairment losses, which is greater than the previous one. So there's an increase in the allowance for impairment losses. This means that if we calculated all of the changes or all of the impairment losses, that it will be greater than the decrease, right? That means that because the increase is more greater than the impairment losses that have to be recorded by the Bank CIMB Niaga is greater than before. Therefore, because the impairment losses is greater than before, it will also reduce the assets of the Bank CIMB Niaga and also reduce the retained earnings, the Bank CIMB Niaga return earnings by 5.4 million rupiah. Okay, so that's all from us. Thank you for the intentions. And this is the reference we use to make this slide.